And welcome back, guys, to another part in the Fibonacci training series. I hope by now at this point we have a good understanding of the few things that we talked about and what we really use it for. And I hope this is starting to make a little bit more and more sense as you look forward with it. We talked about, at the end of the video, extension levels. So target levels. At the end of the day, the first thing we use these for could be potential targets in our market when we've found that entry or that entry zone. I like to call it an entry zone because it can always rest anywhere in between there. And then, of course, first target could be back to 0%. That's your most likely type of trade, because not all the time is it going to always go to here or here on this type of trade setup. Sometimes it might just push a little bit through 0% and then start to retrace again, or just go to minus 27, or even extend further. So it's really various on where this could go. It has three potential points. The most average one to see would be back to 0%, of course, because that's the first. And then after that, minus 27, that's always a good target range. This one could be, especially depending on the time frame you're viewing. This one, we're looking at a daily time frame. So that one might take a longer time to actually get hit, or might get hit a little bit after this one, maybe a couple days or weeks even to getting hit. We'll kind of look at it here in this chart that we've already been through in the first couple of videos. We really worked our whole way down, and I'll kind of skim through this a little bit quicker pace. Now that we've been through all this and seen it, we should understand now what we were looking at as far as entry with the Fibonacci. So let's take it, and either or, I'm going to keep showing you guys from wick to wick, because that's going to become something you prefer to do. Like me, I drop body to body. That's one way that I learned to do it, and I've done some back testing on the chart and seen that it can be a little bit more reliable. Now here's an example of a first extension, you could say, or a scenario where the market made that first wave down, and we have the first correction up to 61.8%. So target number one is back to 0%. That's your target number one. That's the minimal target. And you can see how the market really worked its way there and had some sort of pausing and decisiveness and formed that next low here. The extension would have been here. You can see just barely we almost extended from that lower high to minus 27. Very close to extending right there to that minus 27%. Could have went further. You can see later on, just off of that same fib, minus 618 did end up getting hidden way later on. So let's keep looking at the other scenarios that we played out in the first videos. You have the second retracement here from the previous high. And we have our retracement, which went up to about 78.6% here. You can see how the candlestick, this daily candlestick, just wicked off 78.6. Almost like a shooting star and a hammer candlestick there, formation. And we marked down to 0%. That could have been, again, initially a first set target. On our live trainings, we talk about decisions you can make really a lot when price gets to these numbers. There's a lot of decisions you can make alternately. Closing half your trade, taking partial profits, and riding it potentially to the next extension level. So you can see, like, the market wants to extend into these levels. It can get there shortly, or it can go right to them. You can see eventually how we extended very close to minus 61.8% here. So these are your ideas when you have this type of setup. This could be classified as its own type of setup, and you might see it on the daily time frame, not every single day or every single week. You'll probably see it a couple times per month. But this is a great setup that can really reassure accuracy and where the market's going long term. When you see this structure, when you see this long downtrend structure. So again, we have right here sort of in the middle. We've looked at all of these again in our first video of the training. Again, here's where I go back to keeping my first wick here, or going right to the body, sorry, of the candlestick. Here's where again we go right back to that, and you can see just more price gets touched in that zone, right inside of that zone on the wicks. So extension levels. So a trade setup like this, we'd be looking at entry here, and then targets number 1, target number 2, or even target number 3. So that's again how that works. You can see the market really wants to go to them. The market really wants to go to these targets. Those are what we call, whenever you hear someone say extension levels, this is the type of concept they're really referring to. Extension levels in your fib. So working the way down. And there's one more thing we'll cover in this video briefly, is the risk portion of this stop loss. We have the lower swing high from the previous one, lower lows. We've been doing that already. Perfect retracement at 61.8. First target was hit nicely, and second target was hit shortly after. And the third target, you can see market ended up extending off of that further. It just consolidated here and went down more over here. Could have went there. At the end of the day, markets could have extended to this low here, or to this percentage. As you can see, it looks like it doesn't do that often. We only had one where it did that. So far, minus 27, between 0% and minus 27 is a great enough target, or a level where you're anticipating the market to go longer term. If we're looking at entering here, right, say we do enter there, or even say we don't, but we spot that setup afterwards, the market could be here or going down already. We could look at where it's going and try to be involved in that at the same time. We could look at these as levels. Maybe we're not in at the Fibonacci retracement entry, but maybe as this market's going down, we have an idea that it might go to here or even here, going further. So let's try to be involved in that and aim for that price. Same for you down here. So we looked at entry. We're looking at target right now. Something that's all going to be a mist of practice, a little trial and error when you're drawing this. But you want to practice this for 3 to 6 months on the charts throughout currency pairs, and even longer. But generally that first 3 to 6 months you'll really grow with practicing something like this. So entry purpose we looked at. Here's a great example of an extension. Entry. We also use the fibs, or the concept of this market structure, for our stop loss. So these percentages, entering say in these percentages, give you an ideal area for a zone of entry, or a high probability of zone of entry. We also have coming back to 0% as our first target. Minus 27% could be secondary target, and then even a third target to that is minus 61.8. You can see this is a perfect example, and this was in the month of September. We're recording this video right now in October 2018. Perfect wave down, retracement, secondary wave down. There's your extension levels. So when I was talking about in the video prior to this, when I said market structure, you have to recognize market structure like this. The goal with the entry and the extension is to take out this low, is for the market to go significantly lower than that one. and continue that, and continue that. Right, that's what we look at here when we see the entry zone, the first high, the low. This low got taken out right here and continue to that next extension level and even to the next one. Now stop loss, we'll briefly touch up on this before we wrap this video up here the next couple minutes. Stop loss, this is the easy part. So I just saved it for last. It'll be the quick, easy part. We went over entry. We just summarized target. And again, another example here. So this broke the low. This example, we have the high, we have the low, and we have the lower high retracement. The low did get broken here. That was first target, back to 0%. Just shy of hitting minus 27% here. Does it have to go? Is it always going to go to minus 27%? No. But really what we're trying to get to is really summarize everything we talked about at the beginning with market structure and its nature, what it wants to do, and how this tool can help us. Stop loss is the next part, which again comes off as the easy part when you're understanding this type of trade setup. Because this type of trade setup is a setup of its own that involves having the previous high and the retracement for the lower high entry. And then target whether it's there or down more. So the stop loss part is easy. We're looking for entry here. Where we're placing our stop loss is behind us, right where we started out drawing the fib. This is the easy part. So if market structure is continuing like that, and we're finding that next high, the next lower high, stop loss location is easy enough to put right behind us. As we're entering here, we're anticipated that the market's going to go lower, or at least back to this point. So I'm entering here. I'm keeping my risk basically up to the left. So if we continue that process, we enter here, we keep our risk up behind us. Our stop loss, which is, again, one of the few coordinates that you have in a trade. You have your entry, stop loss, target. Do you always need targets specifically? Not always, but it's a good thing to practice and really get into the ability of forecasting where it could go. It's good to have targets. So you look at another, here's a prime example. The high to low sequence. We call it a high to low sequence, or 1, 2, 3 I like to call it. We have our entry lined up in here on the fib retracement, which you can see formed resistance around. It's good to see if the market forms resistance or support at these levels. So if we're looking to enter here, where you would coordinate your stop losses at the previous high. That's just the plain, simple method it is. So going forward, look at the second one here. We could take the fib from this high to the low. We get the push down, followed by a retracement. We know that already. Entry zone. So if I'm entering in there, I could be entering at 61.8, 70%, 78%. One of those three numbers. I'm locating my stop loss behind me, at least significantly close to here, or back at this number basically. So that I talked about at the beginning. That would be one of the things we would define as risk. Now it could be bigger or smaller. Like for instance, from here to here, we might have not even been in that trade because the market just started its rally. It's good to see this already happening to get a really good understanding of the higher probability or the longer term direction to it. But just two more examples here. On this method, you have, again, entry zone could have came anywhere realistically in here. Stop loss would go more and less behind us, depending on how actually far it is. Because would it be worth you have to also analyze, would it be worth taking a trade here, putting my stop loss all the way there? That could be pretty big of a stop loss. But it would have been a really good entry. One more or two more examples we'll wrap here. Is entering off the percentages, the fib retracement percentages. Nice entry zone. So location of the stop loss is best, safest to put behind here, right at that high you drew it out on. More or less at it or even a little bit above it. Some traders will even put the fib or their stop loss a little bit above that point, not directly at it. Sometimes traders will put it 10, 15, 20 pips above. You find your entry zone. You know you're just basing your stop loss off of the previous market structure behind you. So that's really going to summarize this video, guys, and this training series. If you really wanted more information on this, be sure to tune into the live sessions on IML TV. I talk about this in depth, more longer time spent on it. So I hope you guys enjoyed that. Be sure to backtest this, look at it on your charts to get a really good, better understanding of it. I'll see you guys on some next trainings. You guys take care and enjoy.